The repossession market is growing day by day. There are more and more people having their vehicles repossessed, but it's not because of the reasons that you might be expecting them to be. The number one reason why people are losing their vehicles is because they got into loans from subprime finance companies. See, if you were able to get a automobile loan at a reasonable rate to where you had reasonable payments, you wouldn't be in that situation. So when I looked at the numbers, by the numbers, why are there so many, it's the amount of repos is about the same as it was a year or two ago. And it's actually kind of going down, but the numbers of subprime auto repos are going up. So if we go within the numbers, we can see that automobile repossessions, the number one reason why people have their automobiles repossessed is because they've gotten into high interest, high payment, subprime auto loans. Another piece that goes with these high interest automobile subprime auto loans is that the vehicles were not really worth what they were sold for. I get a lot of people who put in their comments and they say the vehicle broke down a month later. The vehicle broke down 2 weeks later. The vehicle kept breaking down. And they were like, I just gave up on the car. And then some people have even said that they went to the subprime dealer and told him the car just keeps breaking down. And the subprime dealer was like, bring the car back. We're going to get you into another car. And they take that money and put it on top of the new car with another subprime loan. So it's like going to someone and they're like, you're thinking they're doing you a favor. And they're like, well, the raggedy car that we sold you with the raggedy subprime interest rate and the raggedy high interest the payments that you're paying, we're going to take that raggedy car back and put you into another car and have you having to pay for that car. That car's the money on that car did not go away. They put it on top of the other car. And now you have another car that is probably not worth the money and could potentially break down. And you had the high interest subprime auto loan payment and the high interest rate all over again. So now let's talk about what you can do. Because if your car has been repossessed, let's talk about what you can do to potentially not have to pay the debt. And when I say not have to pay the debt, that's because there's violations. I'm not talking about not have to pay the debt because you don't owe the debt. What I'm saying is if there's violations that happen on two people that legitimately should allow them not to have to pay an auto repo. So let's go through them real quick. And we will talk about doing a 1099-C cancellation of debt on a repossession, but there is a process. You don't just give them a form saying, hey, go get this money from my trust account. That is a no-go. That does not exist. What does exist is that you can explain your situation to the finance company by doing the process that I'm going to go over with you right here to get them to understand what you have went through and that they should potentially forgive this debt. So now let's first look at this stuff that I'm giving you, we've dealt with this. This is not where we just saw a news report or we saw this and that. We've actually talked with companies. We've actually had attorneys that have reached out to these companies and went back and forth and talked to them about certain situations. And I can tell you that some of the times there's an excellent resolution. Some of the time it's a hard fight. Some of the time it goes against the clients. So this is real deal information that I'm giving you right here. And from what I've reviewed, this puts you in the best possible situation to have your debt forgiven. So now, first thing that you want to look at is you want to see that if that subprime auto lender had any type of lawsuits against them, and if it was sold to a debt collector, you want to see if there's any type of lawsuits against that debt collector, because you're going to need to have that information in hand to be able to build your case. Not saying that you're suing them, but your demand letter. Everything starts with a demand letter on what you'll need to do to get them to start understanding how you are going to fight them if they try to proceed with this. So if there's lawsuits with the original creditor, automatically you know that potentially your loan could have been included if it's with your state. I'm talking about class action lawsuits. Even if it wasn't included, your state was not included, you could read that lawsuit and see if there's certain things that you believe happened to you. Like, let me give you some examples. In the Santander multi-state, 36-state class action lawsuit, they showed that, number one, the automobile finance dealer, or the automobile finance department who would sell the loan to Santander, someone was changing the application around. People were putting, hey, I work here, this is how much money I make, this is my bills, all that stuff. Someone in there was changing stuff around because they knew what Santander would say yes to and no to. Also, someone was doing what's called power booking the vehicle. Earlier, I talked about the vehicle was not worth what they sold it to you for. Well, in the Santander lawsuit, the dealers were doing what's called power booking. That's where they were saying, hey, there's some new tires, there's some floor mats, paint job, certain type of paint protection, all of this stuff. They were building up that vehicle because they knew that if they took a vehicle like it was, like they be trying to sell them to people as is, and they took that to Santander, Santander was going to be like, you trying to sell us, you trying to get us to buy a loan with this car that you're getting to this person, this is junk. So in between there, you got the consumer, and then you have someone with that application. Someone who had that application was manipulating it to get it to Santander. Then going the reverse way, Santander was doing something called an internal score. Now, let me tell you the reason why that's a problem. Because if you think that you're getting your automobile loan based off of your credit score, but it's really not being based off your credit score, they're just running your credit as formality because they're just getting everything packaged up to get it to Santander. And you did not know that. So what that did is it did not give you the opportunity to say yes to this lender, no, yes, I like that deal, that deal. You did not legitimately get the best deal on the table. What you got was the best deal for the automobile company on the table, which was with Santander or whoever, whatever subprime lender they ended up taking your loan to. So you want to look at it. It takes some work. It took work when I looked at it. When I looked at what happened with Santander, when I looked at what happened with American Credit Acceptance, and there's other ones out there. It took work, and I looked at it and I was like, this is a problem. And even if an individual does not live in that state, this is a route that they can take to potentially get that loan forgiven. Now, if your car has already been repossessed and the debt collector is coming after you for that vehicle, for that debt deficiency, car is gone, debt deficiency, and there was a problem with the original creditor, all you have to do is notify them that, hey, these are problems that happened to me, and I want you to cease collection based off of this here. That is exactly what we had an attorney do for people who were going through this, our clients. A number of them either got everything taken off their credit reports, deficiency balance sent to a 1099-C, or they had a settlement offer on a vehicle. And one that I always speak about was a young lady who owed $13,000. They came back at like $5,000. She just was like, no, I don't want to even do that. Look at all the stuff. Look at the way that I was done, and they ended up settling where she got her car and title for $1,300. But that takes work. It is not something that's done overnight, and it's a lot of back and forth work with their legal department, because they're not in the business of just giving away stuff. They're in the business of making money. So if they had a lawsuit against them, even if it wasn't in your state, and they still maintain the debt, you could potentially get the original creditor, the finance company, before they sell your debt, to do a 1099-C. If they did sell your debt, you can get that debt removed and have them do what's called a clawback. That's right here, a clawback from the collector back to the original creditor, and the original creditor does a 1099-C. But you have to tell them that. Jefferson Capital LLC is notorious for buying repo debt, and they are going after people for that repo debt, and some of that repo debt was included in the lawsuits. We had a client who was being sued by Jefferson Capital, and we were like, this debt is potentially in the class action lawsuit. And Jefferson Capital said, we've sent all of the debt back that was in the lawsuit. This was not in there. And we said, okay, you need to check. We're not just going to go off of your words. See, they're not going to want to make that move, because it's like, if we send another debt back, we're going to lose on this one. This was going to be an easy one for us. So notify them that that debt was in that lawsuit, or potentially in that lawsuit. Let them do what they need to do. If you know that it was in the lawsuit, some people had received a postcard and they just did not know. Or if you live in that state, it will be in there if it met the criteria. They must claw that back, the original creditor, and the original creditor is going to do a 1099-C. The next thing is, if the debt was not included and you're still with the original creditor, and you're trying to figure out some way before they repossess the vehicle to get yourself put into a good situation to potentially get a 1099-C, or to get them to do a settlement, this is before they take the car. They have to charge off the vehicle first. And depending on your situation, we have some people who have their vehicle, some way or another, they still have their vehicle. It went through the charge-off process. They do not have their title. And so what you could do is you need to do a hardship, and we're going to say a hardship to the original creditor. Hardship to the original creditor. Oh, I got it right there. Let me fix that. Hardship to the original creditor. I got collector there, but let's just go first. Hardship to the original creditor, to see what you could do to be able to work out a deal with the vehicle. If there's any issues that you feel that you were wrong, you can put that in that hardship letter. Your financial situation, a hardship letter. I could tell you that when they charge off the debt, what they do is they unsecure the vehicle, and most of the time they're going to want to come and get that vehicle and sell it at auction to make as much as they can make on there. And that's something that they usually have to do, because they cannot just, give away stuff. There are investors, there are bank regulators. They're going to want to know what they're doing with those assets that they had on the book and that are not assets on the book anymore. So when they do the charge off, they're going to unsecure the vehicle, and either they're going to let you have it, but they're going to keep coming after you for the money. And this is where you're going to do the hardship to the original creditor, try to work out some sort of situation. But you got to understand that it has to go through a charge-off process. Some people will say, well, I want to try to negotiate with my vehicle. Can I do it without it being on a charge-off? And some of the original creditors will negotiate with you before it's charged off, but you will see this happen. This happened with a client not too long ago. They're going to put it on your credit report as a charged-off account. You might be saying, well, it didn't go through the charge-off process. It must go through a charge-off process before they could do any negotiation. So even if they didn't put it on there right away, when they update your information on your credit reports, you're going to see that it's a charge off, even though you paid the vehicle with a settlement with them. Now, if it's with a debt collection company, what you're going to want to do is we want to get the paperwork from that they should have gotten from the original creditor stating what the car sold for at auction. If it was sold at auction. If it wasn't sold at auction, you better be very careful, because if it's sold to a debt collector, you better bet they got someone out there looking for the vehicle. So your days are numbered on how you're going to try to work this out. And most people who have a good working vehicle, they're not going to want to have their vehicle taken away, but they are on the hunt to try to find that vehicle to take it, because either the debt collector paid a little bit more for the debt and they said, hey, we're going to just pay you a few $1,000s. So when we get the vehicle, we're going to sell the vehicle, or we're going to take them to court and make them have to pay for the rest of that debt, the deficiency balance that they didn't pay you, minus the amount that we purchased that debt, or plus the amount that we purchased the debt for, and any interest that they can add on there. But you have a right to get, if they did buy, if the debt did get charged off, the original creditor did repossess the vehicle, then you have a right to have them have them give you everything about what happened with the vehicle, the auction statement, everything. And then you're going to want to get your original contract and review that to make sure that there's no issues. So even though a debt collector may have purchased a debt, you still need to make sure that you go through all of this stuff here that we talked about earlier, because it could put you in a position to where they're going to say, hey, we're going to cease all collections because we see that there's problems that you had with the original creditor. So that is the process. That is the process. If you didn't take notes, please start the video back over. This is exactly how it works. So, and this is from dealing with real clients, dealing with these third-party debt collectors, and also dealing with original creditors. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different, so you can see my 8-point validation process, my 2-phase settlement process. If you need your credit reports and scores, go to the website, your3scores.com, to grab your TransUnion, Equifax, and Experian credit reports in all 3 scores. Has all of the information that you're going to need to be able to repair your credit. If you have debt collectors coming after you early in the game, grab my 3-pack of letters, statute of limitations, debt validation, and cease and desist collection activities letter to stop debt collectors. Thank you for your time. Please post your questions and comments. This